Hello, Face. Hi, everyone. Ziggy, William, Warren. Who else? My Trading Warrior brothers and sisters are here. Terry and Steve and Scott Pickering. This is where pros come to get an edge. Everyone doing okay? Wicked Red Wednesday. Wicked Wednesday. How are you, Bob? So the bears are trying to take control of stock indexes today. A lot of people saying we need closes under this low, 27.90, to accelerate it towards 27. Right now, this is looking like a failing rally. What's going to be interesting to me, and I would not be long the dollar anymore. We're diverging up here. Maybe it has a push to 97. I'm going to be interested to see how stock indexes react to the dollar coming off, when, if it does. So Euro, be careful there too. 4 hours diverging, it's not ideal, but we are diverging there. 1 hour, it's a little cleaner. I don't think I'd be short the Euro anymore. We came very close to Grega Horvat's objective of 113. What a great trade by Grega. Excellent trade by Grega. See if he went to the door. So that would have paid for your subscription. Short from the 116 level. Let's see if he's still there. Active pattern in play. Yeah. Okay. So he's looking for 112. Okay. Anyway, a couple of great trades by Grega, 2% in that and 2% in the Aussie. He's also short S&Ps, now near break even. And Blaker has something going on the long side of Aussie Kiwi. So, I mean, just look at these trades right here from this week. And if you just did a one standard lot, it pays for your subscription for a few years. And just even this trade, break even if you include it. If you need a good broker, you need to go here to Forest Park FX, talk to Justin, talk to Trent. You can also have more than one account. I know a lot of US traders do not like the FIFO rule. That's how they get around it. And overseas traders can have a rebate program to pay for their subscription here. So let's see what else is happening in the markets. Yen had a little bit of a failure from 1140, and then we'll get to the metals as well. So looks like we had a little 1, 2, 3 here, and now we're back to this pivot. This pivot has really come into play after we got over it yesterday. We had this big move. We'll see if we could get back underneath it. And of course, the metals are getting hammered. I'm actually speccing some longs here down on the trade. Down $2 on gold. Down 9 cents on silver. And you know, there's no reason technically for me to like it here. Basically, you know, we have, you know, not the greatest divergence. In fact, we really don't have it. I just think that the market is so short now. All we need is one reversal day. Could it happen today? We're still sub and lower. But if you look at it down here, I was figuring, you know, 1175, 1180. I tried it at 89, so we'll see what happens here. And silver's a lot weaker than gold, but even the silver is trying. There's a 4 hour and there's a 1 hour. So I don't think I'd be short metals anymore. I don't think I'd be short Euro, cable. Take a quick look at cable. We're gonna have Lydia with us tomorrow. Cable is holding up a little better than Euro. Cable is diverging on the 1 hour time frame. So we got up, I think Andre showed a nice harmonic, and it came in here at 96.85 yesterday, and you have a little 1, 2, 3. Be careful being too bullish a dollar now. Even the super bear that we had on, Henrik, I think he was looking for over 97 before we get to the top. He's talking like 111.80 in the Euro. Once that happens, even the super bear thinks that we could pull back towards the 92 level after we put in this top. So I would say that we'd have one heck of a bear market rally in gold. And of course, you know what's going to happen. The euro could get up to 118 or so, but he's still looking for lower numbers. That's Steve, GM guys and gals. I wonder if he's here. Hey, are you here, Steve? He's on it. Yeah.
He's just having. He's going to be joining, but I don't know what time.
Oh, okay. How are you today, Stel?
I'm very good. How are you, Dale? It's a public holiday here in Greece, so we had a little time with the family this morning, but now we're back home.
Okay. What are you guys celebrating today?
It's a religious holiday.
Oh, okay.
You know, I'm not a religious man, but I'm happy that my wife gets to have a day off. So. Oh
yeah, yeah. You get a family day.
Yeah.
So
exactly.
So you know, I normally bring Blake in. Any fundamental analysis that you could provide in light of what's happening here with the dollar continuing to rally, metals under pressure, everything under pressure today, still, including stock indexes. It's kind of like, you know, the short the world almost type of board that I'm looking at.
Yeah, I mean, the kickoff was with Turkey, as we all know, and the dollar seems to keep going because it's an easy flight to quality target. Now, you know, it's a debatable thing whether the dollar should be a flight to quality as it has been for decades now, because things have changed a little bit in the way, you know, the countries run and everything. But, you know, I completely understand that the dollar is seeing strength. The thing to realize, and I was talking with a couple of friends of mine yesterday about this, is that in terms of when there's danger, where do you park your money? Usually it's treasuries. And treasuries actually right now are one of the best yielding, actually the best yielding instrument. So it makes complete sense that treasuries get a bid. And since money flows into treasuries, well, you know, dollars are in demand. So it all makes sense, and as long as treasuries are, you know, they're at 280, whatever it is, and they're at the big gap to bonds or gilts or you know, other similar bonds, then the dollar will see an underlying bid because there will simply be demand for dollars. And so I think we're seeing a little bit of that. But on the other hand, the market's very nervous. It's still on risk-off mode, even though the Turkish lira is coming back on the promise that they're going to hike rates. Fundamentally, you know, things are really not changing yet. So I think we're going to probably remain on this risk-off mode, which should continue to help the dollar. Then again, at some point, the dollar will start looking strong, which it's already doing that, and you can see the tremors in EM, you know, emerging markets as the dollar gets stronger. They are under pressure. So it's a delicate balance between the dollar strengthening, but contagion from emerging market countries getting to affect other countries, including the US. So you know, it's a delicate balance that needs to be.
Can you think of any kind of fundamental catalysts that would, you know, at least create a correction in the dollar, even if it doesn't end the trend, just something that might interrupt the trend for a few months?
Good question.
The Fed's going to go in September, maybe some dovish language after they move in September.
Yeah, maybe. I mean, we're pricing over 90%, 95% chance of a September hike. It's done. The question is, we're pricing one more for this year, and I think two more and a bit for next year. So any change in language will drive the dollar lower. And we have to remember that the dollar, you've said this before, the Fed is ahead of the curve. They've been hiking, nobody else is. So at some point, they can't maintain this. They cannot maintain this. So at some point, they'll have to either stop or, you know, reduce the pace, or other central banks have to catch up. Will the ECB be hiking? Not yet. You know, they're a year away. So the most likely scenario is the Fed kind of puts the brakes on, given that Trump also doesn't like the Fed raising rates. He shouldn't have an opinion, but he does. So that could be a catalyst. Yes.
Okay, that's a great segue, because he doesn't control the Fed, but Mnuchin, the Treasury, he does control, right? I mean, they're supposed to have some independence. Is it possible, you know, as part of this trade war, and he doesn't like the devaluation of people he's in a battle with, trade battle with, whatever you want to call, and the U.S. comes in to intervene to stop the dollar's strength?
Yeah, I mean, even though this
Can he tell Mnuchin, you know, the dollar's just, you know, I don't care about it being strong, but it's getting too strong too fast, and they could come in. I don't think there's been any intervention in from the U.S. in currency markets for I don't know how many years, but could he order that and have that be done?
Well, the strong dollar is definitely not helping in these times of you know, trade wars. So could he do it? You know, of course, theoretically
He has the authority. He has the authority to direct his Treasury Secretary to do it.
I don't. I think the Fed should be independent, and really, he shouldn't be able to.
Okay, well, that's
what
the Fed.
to do.
The Fed always says we have nothing to do. They never talk about the dollar, but the Treasury is not part of the Fed.
Yeah,
so,
that's true. That's true.
So I'm wondering if he could just pick up the phone and tell Mnuchin to come in and, you know, just sell low dollars. I think that might freak the market out for a little while because it hasn't been done in such a long time.
Well, you know, anything can happen. It's all conjecture. So yeah, theoretically, yes, anything can happen.
I'm a professional conjecturist. So okay. I appreciate you coming in, and I think Greg is going to be here again today. And I had a guest aboard on me, and there's Blake. How are you, buddy?
I'm doing fine. How you guys doing, Stelios?
Very good, thank you.
Good.
So what religious holiday do you got going on over there in Greece?
I don't know how to say it in English, but
they're making me a saint.
It's just a big religious holiday, so
yeah, sainthood for me.
I've never met so many non-religious Greek guys. Hey, Steve.
Yeah.
Good morning, guys. It's Saint Mary's. We celebrate, like, isn't it called Saint Mary's Day in English?
Yeah, the Assumption of Mary. Okay.
Yeah, that's the one. That's the one.
Steve knew.
Yes.
Steve knew. Hey, you're getting pretty
Steve, how you doing there in Naxos?
I have no complaints, mate. No complaints. Sorry, I was muted. Everything is great.
Okay, good. So from your perch, your view, and I know you're checking in. Are you even looking at the markets?
No,
I think he's on a pretty mediocre connection. So.
Yeah, the only waves I think he's looking at is what's coming in from, what is it, the Mediterranean Sea out there?
Yep.
Okay.
Yeah, that's
exactly.
So Steve, I'm assuming you're just calling in to say hi because you haven't been looking at the markets at all.
Yeah.
I have been looking at the markets like a few minutes every night. So you know, I have a good idea of where they are, but no, I haven't been watching the intraday moves at all.
Good for you.
Yeah, continue to do so, and we appreciate you stopping in. And I think you should go back on holiday. When are you heading back?
Friday, actually. Friday afternoon. We're leaving, so Friday night we'll be back.
Well, thanks for stopping in today, and it's nice to hear your voice, and I think you should go enjoy the remainder of what you have today with your family, and have fun out there.
Same to you. Just wanted to check in and say hello to everybody.
Yeah, we miss you too, buddy.
All right, Steve.
Please
Thanks
come home, Stevie. Come home.
All right. Well, hey, real quick before we do have Andre and Grega coming by, I think today.
We have Grega for sure. Gregor's for sure.
Greg is coming in for sure. Okay, we have U.S. retail sales that are coming up. You know, as Dale pointed out, you know, the dollar has just been extremely strong, and you saw the picture of the dollar index I have up here. And frankly, I mean, we're in between pretty key fib levels as far as what we're seeing here. I see a lot of people talking about this potential for this inverted head and shoulder pattern here. You can see it, you know, develop like that. I'm not really sold on the idea that we have a big inverted head and shoulder pattern because it hasn't been such a big down move in the dollar index to where it warrants inverted head and shoulder pattern, but that doesn't mean it can't continue to go higher. That from technically speaking, what I do see here is I do think we're in, you know, this kind of an ascending wedge, and you know, a move back below like yesterday's lows around the 96.50 level can probably allow us for, you know, a move back towards 96, something like this. I think that's entirely possible. We have to watch today's data, which I think is really important to continue, you know, this dollar strength that we're seeing. One of the big charts that I tweeted about it yesterday. I'm going to really focus in on this chart today, and this is gold. That's silver. This is gold. So gold. For those of you guys that maybe don't follow me on Twitter, or you missed, you know, you missed the tweet that I put out yesterday, gold is approaching this major support at 1175 roughly. Yeah, it's a big, you know, you can see from the lows of 2015 to the highs, it's a 618 retracement. Lows of 2016, so not 2015, 2016. It's a 78% retracement, all comes in at 1175. So big support in precious metals down here. The reason why that's a big deal is because I'd like to see it hit or, you know, find some support down there, and then at that point in time, I'm actually that is what I will. That's when I'm going to start shorting the dollar more aggressively. Right now I'm already nibbling on it. I've got a small long pound dollar. I picked up some euro dollar today about, you know, 10 pips ago, but they're small. You know, I don't want to get too aggressive without precious metals getting down here. What I'm worried about is it's such a big support level, and we're so divergent and oversold on some of these smaller time frames on like precious metals, like gold, for example, that I don't know if we're going to make it all the way down there. I think we're going to make it down there. Technically, it says we should, but at the same time, gold has been hit so hard, and you've got people like, you know, Dale, for example, today is like, hey, you know, I wouldn't be short down here. I don't think a lot of people want to be short gold and precious metals down at these levels, not after the moves that we've seen. So the risk of a pullback in the dollar is going to be really high if precious metals start to reverse course. Now, you know, whenever we approach a big support or resistance level in any index, and the gold is a pretty big major index for me. When you know that a big level is coming at, you know, like in this for this example, 1175. All right, we've been as low as, let's just call it 1185 roughly. Okay, there's gonna start buyers start appearing here, and Dale, are you listening in right now? I'm not sure if you're here. Maybe Stelios is.
I am.
Okay, you guys are. Okay, okay, so. Oh, wow, I got all you guys here. Okay, great. So let's say that this is a, you know, this is a really key support. We all know it's a key support. Well, you know, whenever I know, you know, and we all know that they all know that it's a big support level, you go, okay, well, gold's gonna get to 1175. So I'm gonna be smarter than the next guy. I'm gonna put in my bid at 1177, and then you have the guy or gal going, well, I know that big supports here, and people are going to be putting their bids here, so I'm going to put their bids here. I'm going to put my bid here. And then you have another gal that says, well, I know they're all going to be putting their bids here, and then they're all going to put their bids above here, and then they're going to try to outsmart them, and they're going to put their bids here. So I'm going to put my bids right here. So what happens is you start to get layerings of bids ahead of these big key support levels. So sometimes you get really close, but you never quite hit that support because it's so huge and so many people are attracted to be a buyer down there that we might end up hitting a bid. We might not ever end up getting there. And so that's the risk, especially after such a big move. I mean, you get just let's put this into perspective in gold, for example. Let me say, okay, since
I kind of have a theory, Blake, that when everyone's focused on one number, it either never gets there, or if it does, it becomes meaningless. Sometimes we'll just melt right through it.
Well, I would say, yeah, sometimes yes, but in this case, after a 13% drop since the beginning of summer or the end of spring, in an index like gold, which gold's such a heavily invested into asset globally. It's one thing if you're going, okay, well, here, we're talking about the South African rand or even the Kiwi dollar. We're talking about gold here. So this is really big support, and in my opinion, it's huge support, huge drop off, huge sell-off over the course of, for what reason? I mean, other than, you can make the argument that gold's it's a worthless piece of junk and it's better off as a paperweight, or we have no inflation, so it's not an inflation hedge here. So what the hell do I need to own it for? Whatever the reason is, it is, that you have behind what's happening in gold. The fact of the matter is it's a very, very broadly carried asset globally. So I think the risk is that we might not even get down to this support level. I hear what you're saying, Dale, as far as sometimes we melt right through them. I mean, that was the case right over here with this multi-year trendline support that came into play in gold. We just went right through it when we hit 1236, and I think that is going to be obvious, key resistance on any rally. But from 1187 to 1236, that's a pretty big move higher if we do get some sort of bounce. Anyway, I think it's worth noting that we're getting pretty close, and like I said, if you're long the dollar, you have to be careful because we're approaching such key levels on its most the relationship between gold and the dollar, or precious metals in the dollar, is probably the strongest inverse relationship in the markets. So anyway, gold. Yes. What's up, Steve?
Sorry to interrupt, but I wanted to add two things having to do with gold before you change the subject. One, DSI is at 6, which is a very, very extreme, reading, and COTs show that we have the most net short position in gold in history, and we have COTs since 2006. And if you break it down, we also see that large speculators are about to flip short for the first time in the history of COTs. So in gold, large speculators have always been long gold, and they're about to flip short for the first time ever. So those are also
they could turn it today.
Yeah, so those are also things to take notice.
Yeah, that's a great observation. And speaking of which, here's your daily sentiment index. If you guys haven't seen it yet today, for some reason I didn't receive it last night. I had to go out and get it from my source, because we pay for this, and it's like we didn't receive it last night. But gold is still, very low levels. And look at the dollar index. The dollar index registered at 96 yesterday. 96. I don't ever remember seeing anything above like 94 ever in you know, and FX or, you know, not commodities. The commodities tend to, when you start getting down here into like corn, wheat, soybean, all the softs, you know, those sometimes register some pretty wacky DSIs. But you know, seeing the dollar index at 96 is unheard of. Something that you just don't normally see. So I think you're getting to that point where we are risking, you know, a reversal here. But we, you know, I've been playing that the last couple of days. I mean, I've been long the pound. A really small position, mind you, but still, it's just continue to drag lower as DSI remains weak as well. But there are you know, there's some mounting evidence that we might start to see a reversal here. So as far as let's take a real quick look at equities. Equities, you know, the S&P has this like, you know, ascending wedge as well, and we're testing some pretty key support levels here. I think that you know, if hold on really fast. Okay, there we go. It looks a little bit better. The lows from today in the S&P are really, really important. You can see that they're last week's lows as well. So as long as we hold above those, I don't think we need to be too worried. If we start breaking below last week's lows in the S&P, I think that is a little bit of a risk to the market. The pound, you know, real quick. I know we have retail sales coming out in a little bit. We have this little down channel. It's really kept the market in check. We would have to get back above 128 for the cable to start to show any signs of life. The Aussie is just been beaten down. Same with the Kiwi. Both of these currency pairs have just been hit really hard. The U.S. dollar Canadian is just kind of bouncing around a little bit. Dollar Swiss is still range bound in this triangle or wedge, if you will. U.S. dollar Mexican peso really rejected 38% retracement, but you know, we're waiting more NAFTA news here versus anything else. And let's see. The dollar yen's just been bouncing around. We just challenged the underside of this trend line last night or yesterday evening, and reversed from that. But I think the dollar yen is still very choppy. It's really hard to make heads or tails of this. Also, one last thing, if you guys have been following around with what I'm doing, I shorted the euro pound last week at 89.80. I closed the remainder of my short at 89.05 this morning. So right down here as I got up, I closed my euro pound short. I still want to be short. I'm not short right at this moment in time. So we have about 2 minutes till retail sales. So if you guys aren't, I'm going to put this up on my screen on the Bloomberg. I'm going to put it up here in a second. But you see retail sales, we're looking at 0.3%. Retail, that's core. Retail sales at 0.1%. Matter of fact, I'll grab this right here. And what we're going to do, shoot, where did that go?
Blake, we also have unit labor costs, which is, which is a pretty important number, and Empire State Manufacturing.
Yes.
So quite a few things to look at.
Here they are right here. And I'm just kind of moving everything back. Okay, so here's the data that we're looking for. Empire Manufacturing, yeah, non-farm productivity, unit labor costs, and here's all the retail sales numbers. So let's get the yen. Put the yen up. Oh man, why did I just do that? There it is. Getting everything situated here. How much time do we got?
30 seconds.
30 seconds. Okay, so. And you guys will see the data here first, and we'll wait for it. I mean, this. Let's see. We have Canadian existing home sales a little bit later. Industrial production capacity utilization coming in a little bit later after that. All right, here we go.
Okay.
Stand by. Retail sales came in line, actually a little bit better than expected. So
the only weak number is unit labor cost, which is lower, but everything else is beat.
Yep. So the dollar is firmer. You know what? The euro's holding up well. The dollar yen didn't do anything.
Maybe it's only a small factor, but revisions are actually all lower. So maybe it's all balancing out. I don't know.
Yeah, yeah, I see the revisions are coming in a little bit lower from last month. So that's probably going to, you can see, hold on, let me move over here. See, the euro slumped a little bit, and then it's, you know, it's kind of popping back up. The cable did too. It pushed to new lows actually, and it's popping back up a little bit. Aussie, Kiwi, you know, a little stab lower in Kiwi, pop back up again. Dollar Canadian, same thing. Really not a lot of reaction here. The dollar yen popped up and then it's come off a little bit. You know, surprisingly, the euro's holding in pretty well.
Yeah, it was a bit of an anticlimax.
Very much so. Very much so. Well, you know, let's see. Is Grega in here this morning? No, he's still not here. I'm just going to continue to monitor the euro here for a second.
A little piece of information that might not, you know, matter for many, but in my opinion, it's something to keep in mind having to do with retail sales. Is personally, I don't understand why, but retail sales are not adjusted by default for inflation, which means that when you have an increase in retail sales, that does not necessarily mean that Americans, in this example, bought more products. It means that they paid more for the products they bought. So, you know, when you have some inflationary pressures, you do have an increase in retail sales without that showing actual health to the economy. Just some piece of information to keep in mind.
Very good, thanks, Steve. You know, and we're not really seeing the dollar push higher, and that you know also leads me to believe that we might be towards the, you know, very latter end stages of this dollar move, because I mean, look at the euro. I mean, euro's actually pretty much bid here. We came off a little bit. We're even considering where we were at previous to the retail sales. Gold and silver. Let's take a real quick look at gold and silver, because they did come under a little bit of pressure. There's silver. There's gold. But yeah, not much of a reaction right now. Stocks aren't doing anything, and we're probably going to be back to our regularly scheduled summer markets at this point, because it doesn't look like we're getting a lot of activity. You know, in order for the euro to really start to show some signs of life, in my opinion, we have to get back above 120 or 113.60 here. This you can see this line right here. That needs to be taken out. Until then, euro looks pretty heavy. Pound still trading heavy. Pound needs to get back above this 127.35 level, which would actually be just channel resistance, if you will. But I'm not seeing any real reason why that should happen just yet. Gold and silver are still heavy. The equity markets, let's take a look at the S&P really fast. Whoops, that's not what I wanted to look at. This is what I want to look at. Here's the S&P here. Not a lot to do there. While we're trading above last week's highs, or excuse me, lows. Peso is very well bid. The dollar max, actually. And that looks to be it. Let me see if we have any questions that have come in. It was Assumption Day, everybody was saying.
Grega is here.
Oh, Grega popped in. Great, great.
Yes.
Hey, Grega.
Hey,
how's it going?
how are you? What's going on?
Nothing much. We were hoping for a little bit better reaction from this, from the retail sales, but it's been actually quite slow. The dollar yen's, hovering around this 111 level. And matter of fact, I wanted to ask you, because the dollar yen to me has been probably one of the more difficult currencies to read as of late. I really have, even though I've traded it okay, but like I can't figure out in the dollar yen where the next big move is coming. So maybe you might be able to shed a little bit of light on the dollar yen, because I honestly I look at it and I can't figure out where the next move is going to be. I can't I don't know if it's going to be a back to 113 or back to 108. I don't know. So maybe you can shed some light on that, Greg.
Yeah, sure.
And let me see. I'm going to make you presenter here, and I'll let you know when I can see your charts.
Okay, just a second.
Okay, I can see your euro dollar right now.
Yes. So I think that dollar yen is somehow trapped between potential risk of that we are already seeing, and with the dollar strength that we are seeing against other majors such as euro and pound. So I think that dollar yen may stay in consolidation, and what I think it's probably the most important is that in this weekly chart we failed to break above this trend line here.
Yeah.
Okay, so I think that as long as we are below this trend line, there is no real movement coming in play yet. But my primary scenario suggests that we will see still dollar strength also against the Japanese yen, but maybe with a delay. So what I'm seeing is that maybe we get a wave E pullback here to the downside to complete this 5-leg triangle pattern. Okay, because triangles are made by 5 waves, A, B, C, D, and E. So in Elliott wave theory, ideal scenario would be to see wave E retesting this lower side of the trend line. There will be a lot of bears, investors or traders that will try to short this market. Again, market could bounce to the other side of the range. There will be a lot of investors giving up on these sideways choppy moves, but that's when you can expect a breakout. And in that case, I would be looking to the upside. I'm still expecting euro dollar to reach much more lower prices. And with Dale, we yesterday discussed about this potential coming correction to the upside on euro dollar. If I give you just a quick brief outlook here. So what I'm looking at on euro dollar, that sooner or later we will see a bounce into either wave 4 or maybe deeper correction for wave 2 or wave B. And that's at the same time when we may see a pullback even lower on dollar yen into wave E, if we consider that dollar yen is already weak now.
So could today's lows qualify as a low for for the current wave in the euro dollar?
If we look a little bit closely here now, out of a triangle we still need 5 waves. Okay, and this is wave 1, 2, and clearly you can see a very accelerated price action with an extended price move. So this typically appears to be as a wave 3, and wave 3 targets has 161.8% of wave 1. Okay, so we actually, theoretically speaking, we still didn't see wave 3 touching its target. It means that even more downside could be seen after we see a wave 4 bounce or a drop into wave 5. We have seen some consolidation here, so maybe some would say that maybe wave 4 was here, if I make a small adjustment, and wave 5 here, and we go higher, okay? But typically this wave 4 is a little bit more complex than wave 2, okay? Even if they are of the same degree. So best idea is probably that you stay with the trend and expect more weakness, of course, that always works. So I think that we are still going to see more downside after wave 4 pullback. But as you said, we may see some kind of a bounce in the very near term because wave 3 targets are very close around there. But okay. Resistance here, once we get into wave 4, I would be looking at these levels at 1:14.30. That would be my first resistance, and the second, maybe even more important one, would be this previous low. If we pass this previous low, then I would say that euro-dollar is headed higher for a larger recovery.
Okay, yeah, that makes sense. And you know, 114. I mean, that's not a 114.30. It's not a small feat. I mean, that's 100 pips away from where we're currently at. So
yes. So I just don't know if someone wants to trade on the long side. It may be a very tricky to get or to jump or to catch this move to the upside.
Yeah.
So because you know its market is positioned for dollar very strongly at the moment, so the only question is if maybe someone want to catch the upside, where to put your stop loss. So with my techniques, I would have a lot of issue here going long because I have no idea where to put my stop loss. So I just like to wait a little bit more on bottom to form for a larger recovery, but until then I would just stick with my shorts.
Got it. Okay. Thanks.
Welcome. And regarding dollar yen, I think the dollar yen can still come to the downside even more aggressively, especially Japanese yen. In risk of environment, we have seen some reaction lower recently on the S&P 500, and this intraday structure, I think it's very important. This decline I labeled as a 5-wave movement, waves 1, 2, 3, 4, 5, and the most important was this consolidation. Okay, it looks very choppy. We have seen move to the upside, failure break at this former wave 4, then move to the downside, failure break at the lows here for a few points, and then again move to the upside, failure break again at the same levels. So this resistance was very important and very strong for this corrective recovery. And I think, just a second, this resistance right there. And I think that as long as we are below this resistance, there is a risk that S&P 500 will continue to drop down to around 2790 maybe even, or 28. So definitely I stay bearish here, and I think with this price action going forward, with the risk off sentiment, I think that dollar yen could also come to the downside. But the best rates, as you know, the best moves are probably on yen crosses, because we see euro dollar, cable, Aussie under pressure, and if dollar yen also, which already shows some signs of a reversal right now, as I can see, some very aggressive selling. It's still yen crosses that may see more weakness. If we take a look at euro yen here, I see prices here in a wave 4, expecting further weakness for a wave 5. Also, pound yen, it's in a wave 4. Now, I'm just personally, my personal opinion is that I want to see, even if we may see immediate drop to a new low on pound yen, I will not short it here. I always wait on the market to come to me. I identify my levels, my resistance levels, and then maybe act if market follows my plan. So with that being said, I still...
Because there is a potential of a flat, right, Gregor? That's why you said that.
Yes, exactly. So I'm actually comparing wave 4 to wave 2. And if this was wave 2, very complex, as you can see, is deep and deep, I don't think that wave 4 was already finished here. I think that something more complex and deeper may happen here. So my idea is that maybe we'll get a little bit higher prices to retest those previous swings of resistance, and then maybe I will once again look for pound yen shorts here. So that's my just my personal opinion about the trading approach, even if I understand that if dollar yen will just continue straight to the downside with the S&P 500, if pound will continue to drop against the US dollar, then obviously I have no chance to see pound yen reaching higher prices. But that's just my personal approach. I want to wait market to come to me. So do we have any questions about any markets? Yes.
I can have a look at the questions, but before we do that, tell me something. I'm guessing that your viewpoint on the cable is equivalent to the one you have for the euro, right? So you're still expecting lower prices.
Yes, I'm expecting lower prices, and but I'm aware of a pullback that sooner or later could lift us higher. So I favor a pullback and then a drop.
You know, very recently, it's been, I mean, especially last week and in the beginning of this week, the commodity currencies and the exotic currencies, most importantly, have been the, you know, the thing of focus for the markets. What do you think we're seeing here? I mean, in these pullbacks that we're seeing in developing market currencies, do you think that these are corrective moves lower, or do you think there are bigger reversals? I'm talking about the Turkish lira, the ZAR, the ruble, you know, you name them.
Dollars are actually on emerging currencies, you mean?
Yeah, developing market currencies, emerging market currencies, you can call them whatever you like.
How about calling them submerging markets?
That's not far away from the truth, actually.
Actually, I think that Blake also took a look at this one yesterday, if I'm not wrong, right? So actually, dollars are now. This one is very interesting. Now, if you take a look at this decline from 2016 down to 2018 lows, you can see that it was a big decline, but still it had some difficulties to make a straight move to the downside.
It was impulsive, yeah.
Yes, but current reaction to the upside is looking much more aggressive and longer in a very short period of time. So I would count this definitely as an impulse, which means that we may see more upside to come. But this spike, it can be maybe start of a corrective setback. So if I just label this one real quick, that would be extended with 3, 4. I would make it like that. 1, 2, 3, triangle probably for wave 5. So the idea is that we see a pullback, ideally back into this range, and then more upside. So with that being said, maybe dollar in general will impact those currencies even more.
USD-MXN seems to be, to me, to have started, once you have a look at it, USD-MXN seems to me to have started a C wave in an ABC correction. What do you think about it?
Just a second. Dollar Mexican peso. Just a second. This one. Which leg?
I'm talking shorter term, mate. You're looking at the big picture here, you know what I mean?
Okay. So what?
Yeah, there you are. There you are. One more leg higher.
Okay. Yes, if we take a look, just a second.
That was a very, very nice long-term descending wedge, by the way.
Yes.
So you know, we bottomed with the descending wedge. That was a beautiful breakout. And I think there is at least one more leg missing to the upside at the very least. So this looks like a very appealing long, in my opinion, at the moment.
I would label it this like that probably. 4. Okay, I'll remove this. And this is another way. 1, 2, 3, 4, 5. So you should see, as you said yourself, a corrective recovery for sure. And since we already passed this wave 4 and this wave 4, but the correction is still incomplete, then in such a situation, we should look for correction at the wave 2, not wave 4 of the lesser degree. Okay, so the levels of resistance would probably be this whole range. Okay, so once we reach these levels, I think that the trader should be aware of a bearish turn that could take us even lower. But for now, I mean, but for now, definitely wave C may move towards the targets equal for wave A, which means it's still a room for 19.75, 80 or up there. So this is exactly in this area.
I have a question, by the way, about we have questions about USD CAD and crude, and since they are correlated somewhat, I think it's a good idea to have a look at both of them.
Sure. Just a second. So crude oil actually made some interesting reversal lower in the overnight session. Here, as you can see, we have seen a reversal to the downside quite impulsively and aggressive. So I'm thinking that the market completed here this flat correction that we are headed below August 13 close. And this could be very dangerous for this market, especially if we consider that this can be forming potential 1-2 bearish setup. In such case, you know that the next leg, wave 3.
You mean we might have very accelerated, very aggressive leg to the downside?
Yes, that's one scenario. But the second scenario is also valid, which, if I remove this, which may suggest that this decline is also maybe like a leading diagonal. Okay? But the thing is that with this new low, market will turn to the downside with 5 waves, with a structure which will suggest more downside, either after a pullback or with an immediate decline for a wave 3, as I showed you earlier. Okay, so I think that crude oil is headed lower, and at the same time, I think that the dollar CAD will be headed to the upside. But dollar CAD made some very tricky price move, especially yesterday or in this week. It came a little bit aggressively to the downside, something that we have not seen on Aussie or New Zealand dollar. So this pair is a little bit discorrelated compared to others. So I'm thinking about potential more complex decline that is underway down from June 27th highs.
Like a double zigzag.
Like a double zigzag, yes. And the fact is that market also failed to push prices above this upper trend line of resistance. So I think that there is a chance for more downside. We are still, after all, in this downtrend channel. So dollar, in general speaking, is very strong, but there will be pullbacks. And when euro dollar will make pullback to the upside, I think the dollar CAD will have even more issues breaking to the upside. So I think that, and actually those pullbacks on euro dollar cable may not be so far away. I still think that some major recovery we will shift to a major recovery maybe by the end of the month, which means the dollar CAD could easily move even lower. Okay, but regarding in connection with crude oil, I expect more weakness for the next few months on crude oil.
I like that because I'm still holding my half of my short position in crude. That's the only position I'm holding, on vacation. So, it looks to me fine. I mean, I closed, my pattern in play because I can't close half of it because it was a safe thing to do. But, I still believe that there is more downside. I also viewed this consolidation more as corrective in nature, as you showed. So I also believe that, crude doesn't seem to be done. At least it doesn't feel like it.
No, but regarding shorts, so if someone is short here, okay, maybe based on different interpretation like this aggressive sell-off, you really should be careful what will happen down there once we reach prices around 65, 65.30, because if we are starting to accelerate, that's fine because it would be evidence that we are in a wave 3. But if we see only a spike and then turn to the upside, then, as I said earlier, bigger correction could take us back to 68, maybe even 69 before we see a next leg to the downside. So it will be really a key to see what kind of a breakout will occur through this August 13 lows. It will be a decisive or just a temporary one. But the idea is, as you said yourself, that we will see a deeper prices here. I also think that we may even go back to this triangle pivot area around 60. 60 is also a very nice psychological level. After all, we have broken out of this upward channel, so clearly I'm on your side with more weakness coming on crude oil, and with seeing very strong dollar index bullish mode, I think that crude oil makes valid scenario for this drop to happen towards 60.
Blake spoke extensively about about gold before, but we have a friend here asking, what's your opinion on gold and on metals in general?
On gold, I still think, as we talked so many times, I still think that we are here making a triangle formation. Now we are in a wave B, so pullbacks will occur, ideally for a wave E back towards 1270, maybe even back towards this upper side of the range. But the most important message from this weekly chart is that decline from 2011 was made by 5 waves. Okay, so when you have a 5-wave movement, you know where the market is trading, in which direction, and it's clearly to the downside. So what we are tracking now from 2015 lows is just consolidation. So it's just a matter of time when we will see gold prices dropping even lower. I think we will see a break below $1,000. So there's a risk for more weakness to come here on gold, but as I said, be aware of pullbacks. And ideally, this pullback will be wave E of this triangle pattern, as I said. So maybe this pullback will show up at the same time when we see a corrective recovery on euro-dollar, which after all is now in a 5th wave of decline. So
gold below 1,000, what would the equivalent target be for silver? And say it very slowly because Stelios is with us and he might have like a heart attack or something in the process.
I don't mind.
I told silver, I told Stelios about silver that we may see a 10 already year, if not more back probably. So I still think that silver will see lower prices, and maybe that would be a lifetime opportunity actually to buy silver if we reach this level.
Trust me, I agree on that. I mean, silver at 10, gold at whatever you're targeting there, 750, 800. I'm going to have to be making space in my safety deposit boxes.
All right, but Greg, you're looking for a pretty good rally in silver before that happens. $17 possible in this triangle?
Yes, it's
before the next decline, yeah.
Or 16 to 17, yes, around there. So I'll watch trend line resistance out there to limit the upside. But overall, even if we see immediate break to the downside earlier, then I think it's still, then I would just adjust the triangle and say the triangle was completed and that we are already in a new bearish leg here for wave C. So traders have to be very careful when I mentioned that we may see a pullback for a wave E, because wave E, after all, is a final leg of a big complex corrective price move. So it's not really tradable for my taste. Okay, because you may find yourself on a completely wrong way, because it's just a matter of time, as I said, when we will see major break to the downside, and maybe this breakout is after all already happening now. But if you will see wave E, I think it can be maybe better prices to look for shorts, or maybe final chance to get out of your longs.
Greg, Bill is asking for USD NOK. In my opinion, USD NOK has produced a very bullish breakout. from the confluence of the horizontal resistance area at 840, which was also the level in which a descending trend line that was capping price action for a long time was passing. So from a technical perspective, I really don't see anything bearish having to do with the USD NOK, but I would also want to see your viewpoint from an Elliott wave perspective.
And let's remember that tomorrow is Norges Bank meeting, and I cannot see for the life of me anything dovish that they can say. So let's just be aware.
Yeah,
of that.
but if I asked you a couple of months ago, Stelio, what would you think the chances would be that ECB would signal now that no matter what they won't hike for the next year? How big of a probability would you assign to that?
Yeah, I agree, but they don't have 3% inflation like Norway. It's a very different.
Yeah, nobody has 3% inflation. They all have more.
Yeah, okay.
They're just masking it with the BS numbers they're making up.
So, dollar NOK, what I have been talking about this for the last 2 years was that we are seeing a corrective pullback. We have seen a very nice, perfect corrective wave back for 38.2% compared to the previous extended move, which was wave 3. So if you are familiar with the Elliott wave cycles, Elliott wave rules, then you know that this is actually a textbook pattern. A bullish impulse, wave 1, 2, 3, 4, which means wave 5 should reach higher prices. We are just breaking out of this consolidation, and clearly there is no chance that you would count this previous decline as an impulse, okay? But now current reaction higher is looking quite aggressive, and on a daily chart is in 5 waves. So I'm just considering that maybe this is now
leading diagonal.
Leading diagonal, yes. And also we are moving above this wave B swing high. So technically speaking, trend is switching. When you see a break of above swing high, is switching from bearish to bullish mode. But there will be a lot of traders figuring this out too late. Okay, so a pullback for wave 2 will occur, and ideally it would take us back into this range, and then we see a next leg to the upside. Also here, what I'm looking at now on the 4-hour chart, potentially we are completing this intraday 5-wave movement to the upside, so be aware of a correction, but probably not this way.
So actually times up perfectly, you said, with the Norges Bank tomorrow, because yes, if we do see a hawkish, which would make sense to be honest from a macro perspective, if we do see some hawkish rhetoric from the Norges Bank, that might actually trigger the move lower that you're looking after counting 5 waves higher, and perhaps the end of a leading diagonal, Gregor, right?
Yes, exactly. But as I said, after that wave 4. So this wave 5 will then complete this blue wave 1. Make sense? All clear?
Absolutely. Coach, do we have a
Thank you, Gregor. No, I couldn't reach a pretty poor track record with crypto people.
Speaking of which, we don't need crypto people. We have Gregor with us. I mean, the good thing with technical analysis and daily waves is that you actually don't need a fundamental. Anyhow, if you want to make a fundamental approach to Bitcoin and cryptocurrencies, they're probably worth 0. So let's go ahead and see, what the charts actually tell us, because that's what matters.
Yeah. I have here a chart.
We've been seeing extremely bearish price action. I mean, especially Ethereum breaking below 400 and accelerating. That was like a huge technical level getting broken. What do you think is happening here in the crypto world?
I think that there are still too many new traders that joined this environment last year. There's too many of it still alive. So everyone have to completely give up probably on these crypto currencies, and we must see much lower prices to erase all of the gains that we have seen from 2017, and then maybe we may starting to see a new recovery. So I still think that there will be a bounce coming, but at this stage I think that there is room for 5,000, 4,000 on Bitcoin. So And for now, I would say that be patient if you want to invest in cryptocurrencies. Be very selective. There are some cryptocurrencies that are showing strength, so you need to have a lot of different cryptocurrencies on your radar screen if you want to invest, especially on the long side. As I said, you will have to be very selective. For me, I would wait a little bit longer. I would wait on this ending diagonal to be completed first. Now, ending diagonal is a 5-wave pattern that can occur also in wave C, like I have here. So ideally, we will see here 3 legs in ending diagonal. So even if we see a break to a new low and a reversal to the upside, it does not mean that we already completed this ending diagonal. So I'm expecting actually another corrective rally, then another drop, and then maybe a reversal till the end of this year. Okay, but the idea is that this bear market is still not finished, and that we have room for more weakness.
I've seen some 2,500 numbers, Greg. Is there any way you could get to that level that cheap on a wave count? To 2,500.
2,500. Okay, that's around there. It's this correction.
Yeah.
It's very, very possible, of course, but not with this ending diagonal count.
Okay.
And probably I would have to adjust the fuse and make some new interpretation. But the idea is that I will stay bearish and I will be looking for more weakness on cryptocurrencies, even on Bitcoin and others, until I see 5-wave bounce from the lows. So if I will see 5-wave recovery from a new low, then obviously I will aggressively turn bullish. But that will probably happen when you will see CNBC saying that Bitcoin is done, you know. So, but obviously,
are you kidding me, mate? That's going to happen when the sun freezes. I mean,
no, they're getting there. I've heard people on CNBC talking about.
But CNBC have been cheerleading like crypto, like it's like the new messiah or whatever. I mean, it's even funny sometimes. You see the people they bring on and they try to, you know, no matter what happens in the markets or what kind of news come out having to do with cryptocurrencies, they come out and they try to spin some kind of a bullish interpretation to it.
Yeah, Brian Kelly and all those guys.
Yeah,
but I've heard Melissa Lee pushing back. You saying things like, "Well, you said it was a good buying opportunity here and here and here, and what about the opportunity cost of waiting 10 years for this to build out like .com stocks?" And anyway, you're starting to hear some pushback when Fast Money and Melissa brings on crypto guys now for the first time. You know,
maybe for long-term view, you know, it's for a long-term investment. It's still maybe good opportunity, but maybe you just have to a very proper position management. I personally, would have no problems to buy Bitcoin around 5,000, but probably I would have some money left to buy even more at lower prices. But the common risk should still be allowable, and be aware that we may go even back to 100, you know. But
I heard an interesting tidbit yesterday. You know how like miners have production costs, like, you know, gold production costs are 1,100 or whatever. Someone told me yesterday production costs for a Bitcoin's $6,000 to mine one.
I can verify that. I can verify that because I was running the numbers out of curiosity with a friend of mine. I mean, I can tell you if it's exactly 6,000, but I can tell you that ballpark, that's roughly a correct number. Yeah.
Yeah. So, you know, maybe it's going to take people saying, well, you know what? I'm not going to mine them anymore. It's a loser. And then maybe supply dries up a little bit because people give up on mining because they can't make money doing it.
Yeah, but we need, I mean, if I want to be the devil's advocate here, Dale, I can tell you the following thing. Bitcoin is something that has and will always retain an intrinsic value of 0. Think of intrinsic value. I'm not saying that you are very well aware of what intrinsic value is, but think of intrinsic value in very basic terms. What is the value of something that you would be forced to hold forever. So, for example, you know, a pair of shoes has some intrinsic value because, you know, you can wear it until it's done. Gold has intrinsic value because there are several applications, you know, that you can use gold for, or even make it jewelry or whatever. You know, fiat currencies and Bitcoin have no intrinsic value. The problem is that Bitcoin is lacking other things that it has, but this is not the topic of conversation. The question now here is the following. Let's say that supply does dry up because, as you said, let's say the price goes below the cost of mining. But what makes you think that demand is going to pick up? I mean, it's all about faith here, right? And unless we find some reason to get renewed faith, because there are a lot of people that already got trapped, as far as we know, the vast majority of accounts in the major crypto exchanges were created when Bitcoin was between 15,000 and 20,000. So we already know that a lot of people jumped in enthusiastically and were buying at or near the highs. So the question is, what is going to get the next bunch of investors jumping on the bandwagon? You know what I mean? Especially after knowing what happened to the previous ones. I'm not saying that it can't happen. I'm saying I'm very skeptical.
I think a bear market in the dollar might be one.
I'm not sure if that's going to be enough.
I think it might be.
Look, what I have here a Bitcoin, how people Googled this word, okay? And obviously it was the most attractive.
In December.
Yeah.
So it's exactly the same thing like the price chart, right?
Right.
It's the same thing. And now you don't have any interest at all. And this interest will go even lower when we approach or break towards 5,000. Okay. And what is interesting, look who is on the first place. It's South Africa, then it's Slovenia. I know that Slovenian people.
That's
you better stop
you, right?
Googling it, Gregor.
Yeah, stop Googling it, dude. Come on.
Google it 100 times today, and maybe you can catch up.
Anyhow, five families live in Slovenia only. You know, so you're like what? 10% of the population there, Gregor. So stop Googling, dude.
No, probably Slovenia is on the first place because Slovenia is it was one of the first that ever got into the Bitcoin, especially with the exchange thing and so on. So it was spreading very aggressively and very fast here.
So a big percentage of the population of Slovenians are ex-millionaires, right?
Yes, good point. I know that there are a lot of them who lost a lot of money. Okay, I know that I have a friend who asked me if his friend should make a loan, a student loan of 2,000 euros, I think. He asked me when the price of Bitcoin was exactly at 17,000, and I said him if he's stupid. Okay, because at the end he will be going bankrupt and he will still have loan, and I mean, you cannot play this game with such approach. And unfortunately, there are more than 50% of traders who were in this environment. They were probably without knowledge. So,
oh yeah, they were borrowing off credit cards to buy these cryptos. A lot of the millennials. Anyway, better they learn young than do it when they're old. They have time to come back.
That's a good point, Blake. That's a good point.
Okay. All right, guys. Well, thank you, Gregor, for stepping up this week, and really great trading on Euro. Euro, great call, and Aussie, great call, and I hope your S&P trade works out too. You're in the zone. And Steve, good to hear your voice, buddy. And tomorrow we have Lydia, so we'll be talking cable. And thank you, everybody, for hanging out with us today. Consider signing up. I'm guaranteeing a refund on the $1 trial. I'll mail you $1 if you don't like it. And also, don't forget to call Trent and Justin so that when fall starts and all the hedgies are back from the Hamptons, you're set up and feel comfortable with your trading platform and the security of your funds there. So that's a wrap, everyone. Don't forget, don't just count your pips, count your blessings. Thank you for being part of our trading family. And Steve, Grega, Stelios, Blake, see everyone tomorrow. Good hunting and have a great day. Adios.